Imagine if I told you that the greatest investors in history don't share the same favorite stock or even the same investing strategy. Some bought cheap companies, others bought growing businesses, some traded, others held for decades. Yet beneath all those different approaches lies one invisible trait that connects them all, and once you see it, you'll never look at investing the same way again. Most people think investing is about intelligence. They believe success belongs to the person with the fastest computer, the best insider knowledge, or the highest IQ. But if that were true, the smartest people on Earth would always become the richest investors. History tells a different story. The real battlefield isn't the stock market. It's the 6 inches between your ears. Every legendary investor eventually learned one lesson. Your emotions are often your biggest financial enemy. Think about it. When markets soar and everyone around you is making money, your brain whispers, "Buy now before you miss out." When markets crash and headlines scream disaster, that same brain tells you, "Sell before everything disappears." Fear and greed speak loudly. Wisdom usually whispers. That's why investors like Warren Buffett, Charlie Munger, Howard Marks, Peter Lynch, and John Templeton all emphasized different strategies but shared remarkably similar psychology. They understood that controlling yourself is more valuable than trying to control the market. Imagine 2 friends who each invest the same amount of money. The first checks prices every hour, panics during every downturn, and jumps from one trend to another. The second spends time understanding businesses, accepts that markets fluctuate, and patiently sticks to a well-researched plan. 5 years later, their portfolios may look completely different, not because one was smarter, but because one was calmer. Legendary investors know something many people never fully appreciate. Markets are designed to transfer wealth from the impatient to the patient. Patience isn't passive, it's active self-control. It means resisting the urge to react to every headline, every prediction, and every market swing. It means accepting uncertainty without allowing it to dictate your decisions. Another trait shared by investing legends is independent thinking. They don't seek comfort in the crowd. In fact, they're often most cautious when everyone else is optimistic and most curious when everyone else is fearful. That doesn't mean they always go against the crowd. It means they make decisions based on evidence, not popularity. Humility also plays a surprisingly powerful role. The greatest investors know they won't predict every market move. They admit mistakes quickly, keep learning, and never confuse a lucky outcome with a brilliant decision. That mindset protects them from the overconfidence that has ruined countless fortunes. Perhaps the most overlooked psychological habit is thinking in decades instead of days. Most investors ask, "What will happen next week?" Legendary investors ask, "Will this decision still make sense 10 years from now?" That single shift changes everything. It filters out noise, reduces emotional stress, and keeps attention focused on what truly creates lasting wealth: quality decisions repeated consistently over time. Here's the truth that often surprises people. Great investors don't think differently because they're wealthy. They're wealthy because they trained themselves to think differently. They learned to delay gratification. They accepted uncertainty instead of fearing it. They viewed market declines as opportunities instead of disasters. Most importantly, they understood that investing is less about predicting the future and more about mastering their own behavior. So the next time the market becomes emotional, ask yourself one simple question: am I making this decision because of evidence or because of emotion? That question alone can save you from some of the most expensive mistakes an investor can make. If you found this perspective valuable and want to explore more timeless lessons from the world's greatest investors, subscribe, leave a like, and share this episode with someone who's building wealth for the long term. Sometimes the greatest investment you'll ever make isn't in a stock. It's in developing the mindset that allows every other investment to succeed.